Every investor dreams of finding a stock that dramatically outperforms the market. But when you look back at a portfolio after a year, the biggest winners are often not the stocks you expected. Some positions quietly compound while others surge unexpectedly due to industry trends, strong earnings, technological breakthroughs, or shifts in investor sentiment. That's why I decided to review my portfolio and identify the 3 stocks that delivered the strongest returns this year. The results revealed some surprising lessons about diversification, conviction, and the difference between short-term hype and long-term performance. Today, we will talk about the 3 stocks that returned the most this year. Account screenshot inside. So before we get started, make sure to hit that like button. Also subscribe to my channel. 3. The stock that everyone ignored. The 3rd best performing stock in the portfolio was the one that received the least attention when it was first purchased. It was not constantly trending on social media, and it was not the company that everyone was calling the next big opportunity. In fact, that lack of excitement was part of what made it attractive. Many investors chase the companies that are already popular because they fear missing out on the next big move. However, some of the best investment opportunities appear before the crowd recognizes their potential. The reason this stock delivered such strong returns was because the business continued improving while the market slowly changed its opinion. Revenue grew, the company executed its strategy successfully, and investors began recognizing the value that had been overlooked. The biggest lesson from this investment was understanding that the market does not always immediately reward a good business. Sometimes a company can perform well for months before its stock price reflects that improvement. Patience became the difference between a small profit and a significant return. Another important lesson was the power of independent research. If every investment decision is based on what is already popular online, the biggest opportunity may already be gone. The most successful investors often spend time looking for quality businesses before they become the center of attention. 2. The stock that survived every market fear, the second highest returning stock, had one of the most emotional journeys of the year. After the position was opened, the stock experienced periods of volatility where negative news, economic uncertainty, and changing market sentiment caused sharp movements in the price. There were moments when selling seemed like the safest decision. Seeing profits disappear temporarily, or watching a stock fall after buying it, can create serious doubt. This is where investing becomes a psychological challenge. It is easy to say that you are a long-term investor when everything is moving upward. The real test comes when the market moves against you and every headline suggests that things could become worse. The reason this stock eventually became one of the biggest winners was not because it moved upward every single day. It was because the original reason for owning the company remained strong. The business continued growing, management continued executing its plans, and the long-term opportunity remained intact. By focusing on the company's actual performance rather than short-term market emotions, the position was held long enough to benefit from its recovery and growth. The biggest takeaway from this investment was that volatility and risk are not always the same thing. A stock can experience large price movements while the underlying business remains healthy. Learning to separate temporary market fear from permanent business problems became one of the most valuable skills developed during the year. 1. The stock that delivered the biggest return, the number 1 performing stock in the portfolio, was the investment that produced the highest percentage gain and had the biggest impact on the account's overall performance. Looking at the final return, it might appear like an obvious decision in hindsight, but the journey was far more difficult while it was happening. When the position was first purchased, there were uncertainties about the industry, concerns about competition, and questions about whether the company could continue growing. The investment was made based on a long-term thesis rather than short-term price predictions. The focus was on the company's competitive advantage, financial strength, future growth opportunities, and ability to adapt to changes in the market. Over time, strong business results, increasing investor confidence, and improving market conditions pushed the stock significantly higher. The biggest mistake that could have been made was selling too early. Many investors are comfortable holding losing positions for months while selling their winners after making a small profit. This habit often prevents a portfolio from experiencing the full power of exceptional investments. Some of the greatest returns in stock market history came from investors who held quality businesses for long periods and allowed the growth to continue. This investment proved an important rule of wealth building. One great investment can sometimes make up for several average ones. A portfolio does not require every stock to become a huge winner. A few exceptional performers combined with disciplined risk management can have a significant impact over time. The numbers behind the gains, when looking at the account screenshot and the final returns, the most important thing to understand is that the numbers only show the final chapter of the story. They do not show the months of uncertainty, the research before buying, or the emotional discipline required to continue holding through volatility. Every percentage gain represents decisions made when the outcome was still unknown. Many new investors look at successful portfolios and assume that experienced investors always know what will happen next. The reality is completely different. Investing involves uncertainty. Even the best investors have losing trades and periods when their portfolios underperform. The goal is not to be correct on every investment. The goal is to make good decisions, limit major mistakes, and allow successful investments enough time to grow. Another important lesson from these results is that returns should always be considered alongside risk.
A stock that gains a large percentage may have also experienced significant volatility. Investors must understand their own financial goals, time horizon, and ability to handle losses before making investment decisions. The biggest mistakes avoided. One reason these three stocks became the best performers was avoiding some of the most common investing mistakes.
The first mistake was constantly checking prices and reacting to every small movement. Daily market changes often create emotional decisions that damage long-term returns. The second mistake was following the crowd without understanding the investment. A stock becoming popular does not automatically make it a good investment. Another mistake avoided was trying to perfectly time the market. Many investors wait for the ideal moment to buy or sell, but the market rarely provides clear signals. Instead of chasing short-term movements, the focus remained on the long-term potential of the businesses. Perhaps the most important mistake avoided was selling too early. It can be difficult to watch a stock increase in value and resist taking profits immediately. However, some of the greatest wealth in investing has been created by holding high-quality businesses through years of growth. The three biggest stock winners of the year provided much more than financial returns. They provided lessons about patience, discipline, research, and emotional control. The final account gains may look impressive, but they were built through months of uncertainty, market swings, and the willingness to stick with a well-researched investment strategy. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.